Folks, you better get ready. In today's video, we're going to break down the latest on the market and plays. And oof, is there a lot that you're going to want to see. And then we're going to go on to the main entree. One specific stock that is trading at about $6.79 that is a key Nvidia supplier in the super explosive semiconductor space and has shown lots of proof of concept. I'm going to make a detailed case for it and I'll let you be the judge. And the only thing I ask in return for all of the work that goes into making a video like this is that you hit that like button and also don't forget to subscribe. And as always, if you're the one taking the ultimate risk, you got to be the one doing the ultimate frisk. Always do your own due diligence on all ideas presented. Okay, so we got to start with Robinhood. So I want to give a major shout out to all of the folks that believed alongside us in this Robinhood play. We've been absolutely screaming that Hood was a great buy and hold play since early last year when it was trading at just about 18 bucks. And as of Friday, it hit new highs at $113. Absolutely beautiful. That's over a 6x. It's getting close to surpassing Coinbase's market cap. Oof, isn't that juicy, folks? We love Juicy McJuicy. But from the beginning, you have to understand that Hood always had the symptoms of a mega runner. That's why we've been so adamant about it. It's long had visionary leadership willing to remake and lead the industry it's in. It's long had an exponentially expanding user base and engagement of said user base. It's long had diversification of revenue streams, and in this case, really trading instruments, and it's continued to diversify in that from that standpoint. It's long had a strong balance sheet and very long track records of financial health. And these are things that we've been saying for 18 plus months now. So for folks who are new to the channel and you're saying, wow, Charlie only likes the stock because it's up. No. You gotta look back 18 months. We've been presenting this the whole time. Okay, Charlie, that's great, but what about today's pricing? Well, I believe, folks, that we are very quickly getting into the territory where people are no longer investing in the company. They are investing in what is increasingly being seen as the generational leadership of CEO Vlad Tenev. Aggressively innovative leaders tend to command a massive premium, and that seems to be what everybody's rushing to price in here. Tenev has been consistently able to not only push outside of the box, but think in a region where there's not even a box in sight. Started, of course, with no commission trading, and then you had 24-hour trading, a million other things in between, and now he's pushing tokenized stock trading. This includes upcoming tokenized shares of private unicorns like SpaceX and OpenAI, which I think this is going to be a big deal for the industry. Tenev is also leading Robinhood into new markets, expanding into the UK and even election prediction markets, meaning that Robinhood is going to be competing with the likes of Polymarket, which I actually think is going to be a great revenue generating model for them. Vlad Tenev has also said that he envisions Robinhood as the future financial home for millennials inheriting generational wealth, which is going to be at unprecedented levels as the boomer generation passes on. And then we have this new news that just came out that Tenev has transformed Robinhood's engineering by embracing generative AI. Nearly 100% of engineers now use AI code editors, and about 50% of new code is AI generated. But bigger picture here, you got to realize one thing. The foundation of Robinhood's business is still trading volume. People buy and selling stocks, cryptos, options, so on and so forth. And if you look at the data on this, if you look at gross retail trading across ETFs and stocks, I mean, we are at all-time highs, and the trend is pretty damn clear. Retail, everyday investors and traders are becoming more and more common and more active. Why is this? Well, because people are starting to realize that, wait a second, the stock market is one of the easiest, most efficient, and most proven ways to build wealth over the long run. And you combine that with a market that for the last 20 years has been insane. You get big dips, but then massive rips that create massive wealth. Well, people are like, okay, I want to be in the market. A lot of people aren't falling for that old fear-mongering BS where it's like, oh, stocks are going to have 20 years of lost gains. They know that, wait, the stock market is actually rigged because it's pumped by the US government. It's also pumped by endless corporate profits, which tend to go up over time, and it's also pumped by innovation, right? So again, Robinhood has all of these things going for it. Now, how far can this climb? Well, long-term, I believe it's going to climb substantially more. But short to medium term, well, it depends on how long this overall bull market is going to last. These things can last for a long time, but it's impossible to predict. If you're looking at this chart right now and you're somebody that's up a lot and you were somebody that was only looking to buy in for the short term to ride the momentum, well, I'd certainly consider setting a stop loss, because eventually this momentum will die off and you're going to start hearing Robinhood was overpriced, and then the next bull market it's going to go up to a new all-time high. So that is something to consider. Now, in terms of call options, would I alert call options right now? I would say that we want things to cool down a little bit. I like it when my stocks breathe. After Trump won, we said Hood was going to be one of the top stocks in 2025, and we alerted calls back on November 19th, and those ran from $4.48 to $27.05 at highs just a couple of months later, which was absolutely crazy. But at this point, again, I would like to see Hood breathe a bit. I would like to see it take a break, rest. Once that happens, that's the point where I'd be excited about it again. Again, long term, I see it going up a lot, but do I think it's a good idea to chase it just because we're still at a decent deal territory for where I think we're going long term? Well, no. Okay, next, Palantir, the tier of the Palin. So Palantir hit yet another new high on Friday, and this stock was always one of the most obvious money makers in the market. Our longtime viewers know that just a couple of years ago, we came out so heavily for the stock, screaming that you're going to regret it forever if you don't buy it in the $7 region. And then we reiterated that again and again and again and again for years. And we dealt with, as well as any long-term investors in Palantir that are watching this, we all dealt with incredible pushback as people said it was overhyped garbage. And then look at what has happened in 2025, right? Complete vindication. Now, I know I've said this a million times, but vindication never gets old. And what is so beautiful again is that if anybody is curious and is new here and wants to go and search Palantir ZipTrader on YouTube, you'll see endless videos on the stock and my extremely consistent coverage on it. And I don't say that to brag. I say this because I'll see comments all the time that say, oh, Charlie got so lucky with Palantir. Give me a break. We did the work and due diligence on this for years. If you made money on this because of your due diligence, you better not feel bad because some BS artist in the comment section says you got lucky. Got lucky after spending years of work on a stock? I don't think so. Okay, so what exactly is driving Palantir today? For starters, you've got explosive AI momentum. You've got massive government contracts. You've got accelerating commercial growth. You've got analyst upgrades and institutional buying. Institutions are playing catch up because they don't want to explain to their clients why they missed out on one of the biggest runners of the century. And then you've got strong technical momentum. Higher highs tend to breed higher and higher highs. Eventually you get a breathing cycle and that gets subdued for a while, but right now we're still in that beautiful momentum wave. So anyways, again, big shout out to everybody who earned this new high on Palantir stock. And if you missed out on this, well, there's a lot of lessons to learn from it, and there's going to be a lot more opportunities moving forward because there's so many different stocks that are going to do well in this big AI wave that's going to be heating up for the next 5, 10, 15, 20 years. And we're going to do our best to identify them for you, just like we identified Palantir. Okay, next, our MP idea hit yet another new high on Friday. Back on June 16th, I presented here on YouTube that MP Materials was a great buy at $31 because they are the only sole domestic producer of rare earths, and the Defense Secretary literally named the company as a great example of a place where the government can partner with industry. And so we presented that, and the stock has now more than doubled at highs. And the calls that we alerted to Discord members went from $1.96 all the way to $23.10, and actually a little higher after this image was taken. Now, all of this is fine and dandy, but Charlie, exactly what is going on here? Look at this Bloomberg article. Quote, billionaire turns Pentagon into Trump's defense investment wing. Just 4 months into his tenure at the Pentagon, private equity billionaire Steve Feinberg has landed his first big deal, a $400 million bet on the U.S.'s only miner of rare earth elements, a key commodity in the rivalry with China. The deal, which comes alongside $1 billion in financing from JP Morgan Chase and Goldman Sachs Group, is to be the first of several aimed at leveraging Pentagon support and Wall Street cash to jumpstart efforts to break China's lock on global supplies of rare earth minerals, the people said. So not only do they have the Pentagon, but they have JP Morgan and the Sachs over at Goldman backing them. And of course, they also have Apple backing them, which is a whole nother press release that just came out. So there are a few takeaways here. Number one, MP has got all of the backing in the world, and most importantly, the government. And another takeaway is that we're likely going to see more big deals for MP. We're likely going to see more of the commercial sector, the private sector, come in and make a deal with MP because, again, if we have massive tariffs and there's massive geopolitical issues, well, companies in the US are going to want to have their own domestic supplier. And all of those things have the potential to really boost MP share price. So something to keep in mind there. Okay, let's talk about RGTI and RGTI calls. So a lot of folks are still rolling their eyes on the quantum space, thinking, oh, these plays are just working on something that's too early stage. Oh, quantum is a scam. People say quantum computing is just not profitable. What are you even saying? Quantum computing is a technology race. It's not a profit race. If a company fails as a company, but they win the technology game, well, they just become a massive buyout candidate. To me, that sounds like somebody who's looking at computer stocks in the early day of the personal computer and saying, I can't buy that. That's too speculative. Well, who cares? It's the technology race that you're buying. The stock goes up based on the value of the technology. Anywho, RGTI is heating up very nicely, and we alerted RGTI $12 strike calls expiring September 19th, 2025. Back on June 11th, and they opened at about $2.11 after we alerted them, and then two highs, they ran to $5.80. Quite a run, right? And we love big runners. But moving forward, you got to look at the data for quantum. The quantum industry is very early stage right now, so any kind of advances in any way, shape, or form could really cause some massive price appreciation. So again, RGTI, very interesting play. I love the momentum that we're seeing. Okay, now it's time for the main entree. NVTS, Navitas, is a key Nvidia supplier in the super explosive semiconductor space and has shown lots of proof of concept. So why is Nvidia working with them? Well, I think it's because NVTS's tech is crucial for powering data centers, AI servers, and other devices more efficiently. And I'm going to make my case for that. So Navitas Semiconductor makes special chips called GaN, also known as gallium nitride, and SiC, which is known as silicon carbide. These basically help devices and data centers manage power better. Nvidia, the giant known for AI chips, chose Navitas to help power their latest and most powerful AI computer. Why though, Charlie? Well, because Navitas tech helps these big data centers run way more efficiently, meaning they use less energy, they create less heat, and cost less money to run. Nvidia is building massive new centers to run AI like ChatGPT, self-driving cars, and advanced data processing, and Navitas is arguably right in the middle, providing crucial tech to them. Bottom line, Nvidia choosing Navitas is a huge vote of confidence and gives Navitas a big long-term growth opportunity, riding a massive wave of AI infrastructure that's absolutely heating up right now. This company isn't a, oh, maybe one day it'll be big story. No, they're actually doing very well right now. They already have design wins locked in for 2026, and they're targeting multi-billion-dollar markets today. So back to Nvidia. Why did the $4 trillion AI giant select Navitas as a strategic partner? Well, because Nvidia is rolling out a futuristic 800-volt data center architecture, and guess whose GaN and SiC chips they're going to be using? Well, they're going to be using Navitas. Nvidia needs it, Navitas delivers it. GaN is smaller, GaN is faster, GaN runs cooler, and Navitas is the leader in this GaN category. You do some digging, it looks like Navitas has some 300 plus patents, custom GaN fast and GaN safe chips, and first mover advantage. All things that are very important, and probably why Nvidia had so much belief in this company. Now, what about scaling? Well, Navitas runs a fabless model. What does that mean exactly? Well, they design the chips but outsource the manufacturing, so as demand explodes, they can ramp up fast without needing to spend billions on new factories. Now let's talk about the chart. So most of the time when you're looking at a stock like this, people are thinking about it as a short-term play. They buy breakouts, they panic on pullbacks, and they sell before anything big happens. Well, with Navitas, if they end up working, it's not going to be a short-term play. With this type of play, you're missing the forest for the trees if you're trying to play this as a 5-day or a 5-week pump. It's a 5-year conviction play, meaning that you do your due diligence now. If you believe in it, well, you slowly buy it over 5 years and make it earn your conviction over time. Trusting, but also verifying, making sure that it's continuing to dominate and continuing to fulfill what you predicted. So short-term, 1 to 2 years, I think very rocky. Right now, we're in a bull market, so I wouldn't be surprised for this to go up another 2 to 3x before the bull market tops out. But long term, that's where the real growth, I believe, has a chance of playing out. This is where the magic happens. If GaN/SiC chips really become the standard across EVs, data centers, solar, and more, well, Navitas could easily be a $10 billion plus company. So overall, to wrap it up here, this company is disrupting the $1 trillion power semiconductor space. It's partnered with Nvidia to power next-gen AI. It's growing GaN revenue is 50% plus. It's sitting on a mountain of design wins. It's going full force into EV, AI, and green energy megatrends. And of course, right now, data centers are the most important, and it's just absolutely plowing through that. So that's why, yeah, look, bigger picture, I think this is going to be an interesting play. It's going to have some rocky back and forth, some rock and roll, as they say in the 70s. But in my view, this could be a potential rocket ship, and it's one that I think you're going to hear more and more about, especially because Nvidia is collaborating more and more with them and is a big backer. Worst case scenario, I would not be surprised if it became an acquisition target. Again, I don't know if it's going to, but I wouldn't be surprised. By the way, if you'd like to get all of our ideas and alerts first, well, make sure to join us in the Discord with that first link down below. We'd love to have you on the team. Anyways, folks, that caps off today's video. Have a great rest of your day, and we'll see you in the next one.